But let's also talk about Dixon Tech, which released their earnings yesterday. And the numbers did beat the estimates as well. This was also aided by the mobile division, which helped the growth in terms of where the revenue is concerned. Puneet joins us to give us a detailed analysis on this one.
Well, thank you for that. So it's very important to know that it beat estimates because the estimates were 86% in terms of revenue growth. The companies come out and reported a 95% growth in revenue, and that's largely led by the mobile division. The mobile division now contributes more than 85% of the total revenues as well. So it's a key vertical driving the company's growth, and it can't be understated of the importance of this segment, both to the segment for Dixon as well as for India's mobile manufacturing. So that in terms of mobile and EMS division, that's grown 125% on a year-on-year basis. Revenues have come in at 11,663, and Dixon's overall revenues have come in at 12,835. So it's largely driven by the growth in the mobile division. What's also important to notice that they've been able to maintain margins at 3.8%. Now, this was under contention that it could fall by between 10 to 15 basis points. It's come in flat, but this is a key positive because the revenue base has gone up by 95%. So it's getting that incremental benefit in this particular quarter. What's also important is they've now started to establish multiple joint ventures at the same time, which will aid the growth in the component space for Dixon going forward. So while the PLI benefits will end in FY26, the company's new joint venture Q-Tech India is expected to be the growth driver in terms of camera modules. They also have an existing joint venture for display modules that will come into effect in Q4 of FY26, and going forward they're establishing a joint venture with Vivo as well for manufacturing the smartphone. So overall, the component strategy is going to drive the margins, and we might see a positive reaction on Dixon, and that kind of largely view has been maintained by Investec as well. They have a target price of 20,000 rupees on the stock, and they say that the numbers were 6 to 7% higher than consensus estimates, and they are forecasting a 38% CAGR in terms of EBITDA over the next 3 years.
Those are some strong projections that we are looking at from the brokerages talking about Dixon Tech. In fact, even the revenue growth of 95% as compared to an estimate of 86% is a strong lever in it itself.